In this video, I want to bring your attention to a unique scenario that is happening in the pound dollar 15-minute chart. Now, for obvious reasons, this market is in an uptrend because the high number 3 closed above high number 1, rendering number 2 as a confirmed market structure. Now, the pitchfork 2 that you see drawn in this chart is called a pendulum pitchfork, and initially it was supposed to be a projection of the exhaustion point for the retracement of what was the downtrend 0, 1 and 2. But of course the market shifted its flow to the upside by breaking above the high number 1 and closing above it, and then that whole market scenario shifted. And now we wouldn't really say that this is a standard pitchfork, because in a standard pitchfork you need a high, a low, a high, and a higher low. But in this scenario we only have a pendulum pitchfork. However, the line work still stays the same, and this median line is through a probable path of exhaustion for these buyers. Now, moving on with the scenario, when you reach the high number 3, you can see that I've drawn a frequency line that whenever price touches, it starts to go to the downside. Now, I want to bring your attention to two candlesticks in this whole what I would call a sideways market at this point. And again, a sideways market means that the market is at rest, awaiting a major decision by the masses of the market. Now, I want to bring your attention to these two candlesticks. You can see that the first time when price came here, this candlestick appeared, and then the second time this candlestick appeared. Now pay attention to the sizes of these two candlesticks. They're almost the same size. What I would conclude here is that the market maker is trying to create a certain price barrier to let the masses look at as a place of resistance, so that the whole market sentiment can shift to the downside. Now, it's possible that the market sentiment can shift to the downside and we could be looking to short this market. But also paying attention to these two lows and these two candlesticks. They're also roughly the same size in volatility, and they're both outside candles or engulfing candles. Now, the statement that engulfing candles make is that one player is proving dominance, and in this case it's obviously the buyers. Looking at the candlestick interpretation of these two candles, you can see that buyers were fully dominant and also showing dominance in that. So this is a scenario where we have two market players trying to create the dominant move. The next dominant move might be the whole sentiment of the market. Now we can see again that we have an expanding pivot where we have a lower high followed by a higher low, and like I said, that shows market rest or indecision. And we can see that this is also some kind of consolidation, or what we call a sideways market. Basically the market is at rest, but that's what I wanted to bring your attention to, how the market maker is making certain candles and giving conflicting signals. So the best thing to do here is to create more context and see which idea holds more water, and to calculate the risk parameters of both ideas, and then you can be able to take the trade. Thank you.